You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 1 p.m. Central, 2 p.m. Eastern. Yep, it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you have been hopefully feasting and gorging yourself for the entirety of the week. We keep you engaged with the options content here throughout the week, concluding our broadcast week with this fine program, Volatility Views. If you like what you hear, make sure you leave those reviews coming. And I always forget to mention the app here, but you can also go check out the app and leave reviews there. I know a lot of you have been leaving reviews on the app as late as well. So that counts too. That gets into the Google ecosystem. So if you want to leave a review on the app about the app or the show, sometimes you guys do both. That's fine. Wherever you listen to this program, make sure you leave those reviews. Other folks can continue the influx of new folks discovering not just this program, but the entire network. It's more important than ever in these crazy times to have a reliable source of content. We've been around for a while. We've been kicking this can for a while. So I think the folks will like it. Keep those reviews coming. Also, keep those questions coming. We do love to hear from you guys. And joining me, let's see who I'm going to hear from on the show. First off, I'm very pleased to welcome back our old friend. He's been gone for a little bit, but now he's back. Mr. Shelly Brown, the Executive Vice President over there at MIAX, holding down the MIAX hot seat this week. Shelly, welcome back to Volatility Views, sir. It has been too long.
Hey, Mark. Glad to be back. How are things?
Things are good. I don't know if you know this, but we're all in a lockdown and a quarantine, so it's pretty exciting.
Yeah, I've heard that.
A few interesting things popping off here in the market. And also joining us today, who knows, maybe he's from a town that changed America outside of Chicago here, and maybe he's in Detroit, maybe he's in Austin, maybe he's in a Costco near you, hopefully wearing a mask. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, to you as well.
Yeah, good to be here. Good to be alive and enjoying this day. It is gorgeous out. I am overlooking my backyard in that will soon not be my backyard in one of the 10 towns that changed America. Beautiful, historic Riverside, Illinois.
Yes, indeed. And now let's keep on rolling. It's that time, listeners. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review. This is the portion of the show where we break down the week that was and indeed still is from a volatility trading and trending and unusual activity and all sorts of fun perspectives across a broad spectrum of volatility products. And coming into the end of the week here, I say it every week. I'm waiting for the week where I can't, but so far this year, it's been pretty much impossible. Another weird end to another weird week out there. In fact, I've been saying it for so long, the bull has had the bit in its teeth for the better part of the last couple of weeks outside of a few outlier sessions. We find ourselves in one of those today coming into the end of the week. Seems like the bull finally has to take a bit of a break. Most of the major indices firmly in the red today. S&P off about 0.5%. Seems like it's exacerbating that sell-off a little bit as we're kicking off the show here. Dow off about 0.33%. NASDAQ leading the charge firmly in the red, off about 1.3, almost 1.4, closing on 1.5%. Again, the NASDAQ has the most room to run. It's been at all-time highs for a while out here. Seems like jobs numbers are perhaps wreaking havoc a bit with the market today. And on first blush, these numbers seem like they might be pretty good until you read the tea leaves a little bit. The headline was the U.S. adds 1.76 million jobs in July. So that seemed, hey, that's great, right? That should be bullish. Unemployment rate also falling to 10.2% from 11.1%. Again, also bullish. You think this would be good stuff. Then you start digging into the numbers. As is always the case with these economic numbers. You have to dig in a little bit. And then you start seeing how some of these numbers are perhaps not what they're cracked up to be. For example, the government numbers the jobless numbers are adjusted seasonally, and the government does a lot of seasonal adjustments for things like school employment, government employment. When you strip out those numbers, the private sector jobs rose about 1.46 million last year, which is lower than what was expected. Also, U.S. shed a total now of 22 million jobs throughout the entirety of this pandemic. And so far, we only restored a little over 9 million of them. So over half of the Americans who have lost their jobs still out of work. And even worse, 31 million people still collecting unemployment benefits in mid-July. So all of these are not exactly good. Of course, also, if you dig into there's all kinds of ways to measure these numbers, right, listeners? If you measure what they call the true level of unemployment, one of the ways is this U6 methodology, and that concludes that it's about 16.5% in July. A little bit down, about 18% in July, or from June, but still not encouraging. And of course, a lot of this issues with the increasing coronavirus issues and increasing lockdowns. A lot of people thinking, well, perhaps this is about as good as it's going to get for a while, and perhaps these numbers are a sign of things to come out here. Interesting numbers, too, looking at some, I think this comes out of maybe the Journal crunched these numbers, looking at what small businesses have been impacted the most by this. And they kind of fall into the sectors you might guess. Travel hit the worst, 18.9% of those businesses. These are small businesses now, out of business as a result of this pandemic. 18.5% for gyms and fitness. Another one, a very literally high-touch business. So those are kind of having a hard time. Entertainment, too, some movie theaters and things, also over 18% of those closed. Bars and restaurants, about 18%. Beauty salons, 17%. So all of that very much high-touch sector of the small business economy has been pretty much wiped out by this. And these numbers reflecting it. Coming into today's show, we're seeing spikes and VIX kind of vacillating a little bit. As of the beginning of the show here, spikes is about 23.25, puts it down about 2.5 points. So it's down a little bit more right before the show, about 2.75 points. VIX cash right around 22.4, almost 22.5. That puts it down a little over 3 handles from last show, about 3.1 handles. And our old friend VVIX is at about a 106 at the kickoff of the show. That puts it down a little over 8 handles, about 8.5 points from last show. So vol is still frothy, but a little bit down from that, 120 barometer we've been circling for a while out there. All right, that's a lot of place setting. Let's get into the meat. Let's get into the entree here. Shelly, let's start with you. We haven't been on in a little bit. Lots been going on since the last time we chatted. What has been lighting up your tape and catching your eye in the world of volatility and indeed the world of MIAX since the last time we chatted, sir?
Well, it's been certainly interesting times. Been very focused internally on things here at MIAX. We have some new development coming out for the options exchanges. Spike options have been very quiet, pending the relaunch of the future. Working strongly on that. That's been quite the challenge, but we still have high hopes that's coming back soon. That should tighten up the markets and spikes and get that moving again. Most exciting thing we have going on short term, I expect us to start publishing what we call V spikes sometime late August, early September. That'll be measurement of volatility within the spikes family. So the new product coming to market.
I like it. Of course, Mr. Meatball, they did not go with your Viking methodology. So I guess no licensing fee for you, sir.
I just, again, being a Bears fan, I just couldn't do it. Sorry.
Couldn't make it happen.
A great name.
I agree.
Viking. Trading, that's where I'm a Viking. Volatility, that's where I'm a Viking. That would have been amazing. I think you guys made a strategic mistake there. But you know what? I'll get over it and continue to allow you to be on my show.
Just think of the branding possibilities. Go on the raid with the Viking right now. All kinds of things you could do.
And I could actually see Shelly dressed as a Viking to push this thing.
Ooh, that hurts.
With the beard,
a purple helmet, maybe some horns. It would look good.
We get the horned hat on him. That would have been amazing.
Oh boy!
Slap a blonde wig on there. And I'm married. I'm married to a Scandinavian woman, so she could have come out and been your spokesmodel.
Well, now we're talking. Now,
there you go. Keeping it in the family. Before we get too much nepotism rolling here on the show, Mark, I know you're very disheartened by the loss of your licensing revenue for Viking, but outside of that, what's lighting up your personal vol tape this week, sir?
Well, aside from licking my Viking wounds, I am. See, and you would have said that when Vol moved against you. You'd say, "Oh, I'm licking my wounds from the Viking." Anywho, the Vol is at it as stretched as I've seen it in a while. There is a lot of contango in that August contract, in the September contract, in the forward value versus the regular value. We are starting to see some volume in these vol products start to stabilize. They're no longer plummeting. And that's because when these things go back to the teens, they get their use case back for hedgers. So I think that there's, if you're interested in volatility, you make the big bucks when spikes goes to 80. You make the repeated the repeated dollars. The real vol trading dollars when the spikes is in the teens. That would be my argument. Why I'm kind of excited about what's happening.
The big bucks. Well, yeah, we're not quite in the teens yet, but if this trend continues, perhaps we'll get there. Shelly, you're missing out on all the licensing opportunities, like I mentioned. Maybe could have had a nice axe and put, the Viking thicker. I would certainly put one of those in my studio. That would have been pretty cool. But Viking licensing aside, we mentioned before, spikes options waiting for the futures to come back. But you guys just put out your numbers for July. We talked earlier on our option block program this week about how the whole options market as a whole was up strong in July yet again. The industry up about 52%. But you guys were out passing that, up 82% almost in July, Shelly. So what voodoo are you guys working behind the scenes here, Shelly? What's driving all this paper?
Yeah, fortunately, it's not voodoo. I think during the whole sell-off and the volatility in the marketplace, members can get to experience how good our technology is, how consistent we were in terms of round trip times, risk protections, ability to get out of the way when you need to get out of the way, but play offense when you want to play offense. And it's really a quality of markets thing. During the time that the floors were closed, we saw volumes were up in the 14.5% range, and we're maintaining 12% on average. Very pleased with that, but the market is speaking. The markets like our technology and like what we've brought to market.
Well, clearly the numbers don't lie. The numbers looking pretty strong over there in MIAX land. You mentioned the spikes future still halted. Hopefully, I'm waiting for the day, Shelly, you can come on this show and give me the big thumbs up that the futures are back.
So frustrating. I've been a month away for 3 or 4 months. I still believe it's coming. We're working hard on it. It's a difficult process, but they will be back.
I think we got some listeners asking about it again, so we'll get to that in a little bit. Let's get out to the other futures that are still out there. Of course, the VIX futures. Mark mentioned these out there. They've been interesting, shall we say, of late, watching that VIX futures curve. And I've said it before, I say it again, that vol surface holds a lot of answers to your volatility questions. Right now, it's kind of interesting what that surface is telling us. Coming into Showtime, we saw interesting on that front portion of the curve, so the AUG portion, it's pretty much, as of Showtime, was exactly about the same in terms of premium to the cash as it was last week. It was about 2.2 points over the cash last week, and it's exactly the same coming into Showtime this week. That SEP future, as you get closer to that election, that chasm grows a little bit wider, 5.4 points for the SEP future over the cash. That's a little bit wider, about half a point wider than it was last week. Now you start getting out to the juicy period, that period we've been watching for a while, since the beginning of the year, that November timeframe, which is, of course, leading into and coming out of the U.S. election here. That OCC future has exactly 8 points worth of premium priced into it right now. And even Nove still looking juicy, 6.6 points. And then out to Jan even, you're seeing 6 points worth of premium to the cash, which you start reading some of the headlines from this week, it might make a little bit of sense. I touched on this earlier this week on the option blog here, but there was a big group that came together to try to quote unquote war game this election. They claim to be bipartisan and everything else. You can maybe take issues with that. I'm not sure, but there were experts from all different fields, military, political, police, and everything else like that. And they tried to war game different scenarios for the outcomes of the election and what it would mean for the economy and for our political system. And they pretty much narrowed in on 4 different scenarios. Biden blowing the doors off Trump, a very narrow win for Biden, a close win for Trump, but a 5% popular vote win for Biden, and also the outcome that it remains in doubt for weeks after the election because of issues with the mail-in. And pretty much across the board, all of their outcomes seem pretty dire. In particular, they seem to focus in on a lot that we may not know the outcome of this election for a very long time after the actual election day itself, potentially even going into that Jan 6 inauguration day, which probably explains that market premium to the Jan future even out there. And just the beginning of the year in Jan, that premium actually continues beyond Jan. It goes all the way out a little bit. So people are pricing in a lot of vol for a lot of time to come. Though, Mark, if you read this war game synopsis, maybe you could argue they're not pricing in enough vol out there. What are your thoughts on this, these horrific scenarios that they're predicting, and also B, what we're seeing priced in right now in the VIX futures? And this is the topic we've been talking about for a while, but it's starting to come in there now. It's within a few months out here, so it's starting to become more realistic, Mark.
I still think that election premium is out of whack. I don't know, really. I know it's fun to sit here and do all this kind of scenario analysis, but if you're able to predict it, you can already manage it. The reason why vol goes cuckoo bananas is not from the things that we see. It's from the things that we don't see coming. And so I don't think that vol is particularly cheap. The market's not moving very much. And I don't see a scenario where either of these guys win and a 30 vol is worth it.
That's certainly what they're pricing in. Of course, I lived through the disputed election back. I was trading on the CBOE then, and there was a heck of a lot of vol for quite some time. And it seemed like every day, one dangling Chad could drive us hundreds of points in one direction or the other. So if we see another scenario like that, I could maybe see a lot of vol pricing. I don't know, Shelley, does this seem overblown to you? Does all this hysterics around the war games and the election, we're seeing people on both sides making hysterical comments, on the right saying crazy things, on the left saying he's not even going to leave office, all these crazy things. Do you think this is all overblown? And like Mark says, do you think this extended amount of juice they're pricing in is overdone, sir?
It's hard to say. There's certainly a silent majority out there that's scared to speak their minds. It'll be interesting to see what happens. All I can say is the guy from the Allstate commercial with mayhem, he should leave. He's been here all year. I've had enough of the mayhem.
Yeah. I think the consensus for all of us is let's just roll the calendar forward. It's just 2021. Can we all just agree to do that? It'd be nice to be 80 degrees in January. I think we'd all be down for that. We could just pretend this whole year never happened and all sorts of fun stuff. But unfortunately, we can't do that. So instead, we'll satiate you listeners with a little bit of options activity out here. Like you mentioned, Spike's options waiting yet again for the futures to return. But you know what? VIX these days isn't exactly blowing the doors off out there either. Coming into Showtime, we had about a little better than yesterday, at least. Yesterday was anemic. Today, about 218,000 contracts coming into Showtime. That's ticked up a little bit as we've seen the markets get a little bit frothy out there. It's up to about 244. So it's threatening 250,000 contracts, which in this lightened volume time frame is actually pretty good. The ADV is getting pretty anemic out there. It's down to about 315,000. That's down another 18,000 from last week. So when you see some of these numbers, I'm going to tell you in a little bit, you'll see why that number is starting to threaten the overall 300K level to the dark side. Before we get there, listeners, let's start it off by looking at what the hot positions are out there in VIX options land right now. These are, of course, not the big trades from today, but the total big size open positions out there in VIX options. We said for a while that this top 10, this total OI is pretty paltry, pretty anemic, and that's pretty much the case again. Right now, we're seeing a total OI of VIX just a little bit north of 5 million contracts, about 5.3, which is pretty light and also pretty equal opinion between the calls and the puts. Usually VIX obviously biased to the calls. Right now it's about 2.75 million open on the calls and about a little over 2.5 million open on the puts. So a slight bias to the calls, but not much. It only costs you 82,000 contracts right now to break into the top 10 in VIX land. That gets you to the August 22 puts. Spoiler alert, a lot of puts on the list this week, listeners. So maybe that will change things if this put palooza continues out there. 84,000, number 9 of the Aug 21 puts, 94,000, number 8 of the October 25 puts. That is the first and only October on our list. Number 7, 94,000 as well of the Aug 24 puts. Number 6, 95,000 of the September 20 puts. That is the first and only SEP on the list. So everything else is pretty much August, listeners. Number 5, 97,000 of the August 25 puts. Then we get our first call on the list. We go up to 102,000. So we have to go all the way up to number 4 to break into the 100K club here. That gets us to the Aug 60 calls, a very optimistic strike out there. And then number 3, 109,000 of the Aug 40 calls, also an equally optimistic. That's beyond what they're pricing in for election premium out there right now. Then we get to number 2, 128,000 of the Aug 23 puts. And number 1 with a very small bullet, a 22 caliber bullet out there, is 136,000 of the Aug 20 puts. Just for frame of reference, if you're a new listeners, 136,000 is usually just about enough maybe to break into the top 10 on a usual average week out here. But now, right now, it's enough for the top of the top 10. Mr. Meatball, an interesting week out there, kind of a light week volume-wise. Anything catching your eye out here in VIX options this week, sir?
Nothing in particular. It's obviously an interesting week to say the least. But I've not seen any like crazy trades go up or anything like that in this product. We do have some people that are trading around August, trying to trade that big contango. We've seen some puts trade trying to collect some carry because there is a really nice spread between Spike's cash and the implied Spike future, or VIX cash and the implied VIX and the regular VIX future. Either or, huge spread. So there's some money to be made there. That I'm seeing, not really seeing a lot of other things. I'm still kind of tongue-tied by the lack of a Viking in my future.
No access.
I don't know what to say, Mark.
I had a place cleared on the wall here in the studio. We're not going to have any in-person guests for a long time, so I might well have cool tchotchkes. I had a place cleared on the wall for a Viking axe.
Just see, you met Lauren. She's like, what, 5'10", big, long, blonde hair. She's got, and didn't they use a weapon called a spike back in the day? You put a big old spike, you put like a spike with like a severed head with the word VIX in the eyes instead of the X.
The severed head, for a dead
person.
I'm sure Finra would love the severed head.
And now she's got like a battle axe on her right arm and she's stomping on that would have been amazing. I'm just saying.
Well, I'm more missing out on the cool tchotchkes. Like I think the Vikings, known for their axe work, shall we say, that would have been a cool one. But c'est la vie, V-Spike. We'll think of something, maybe a railroad spike. How about when it goes live, used to put the golden spike there to end the railway. Maybe we do a golden V-Spike for when the futures are back, or when V-Spike gets listed and off the ground. Like I mentioned, today's action out here in VIX options, listeners, decent paper, one of the better days of the week so far, closing on 250,000 contracts. That puts the big print out here, 29,000. I shouldn't say big print. most active contract, because these all didn't go up in one print. 29,000 of the AUG 60s. Again, that strike holding some fascination for someone out there, as well as 21,000 of the AUG 20 puts and about 20,000 of the October 28 puts. Yesterday was a pretty light day, only 170,000 contracts. So we've seen VIX do that in a single trade before very easily. 13,000, almost 14,000 of the AUG 22 puts was the big print yesterday. Wednesday, a little bit more active day, 389,000 contracts on the tape. The big prints, 22K of the AUG 22 puts and about 20K of the AUG 23 puts, and also about almost 18,000 of the AUG 24 puts. So nice little juicy put strip, perhaps catching someone's favor out there. Tuesday, 263,000 contracts. The most active contracts out there were the SEP 32 halves, 15,000 of those, and the October pars, the par strike back in action, 12,600 of those. I'll have to dig into those a little bit, see if that's closing. I haven't seen a par strike lighting it up in quite some time. I'll have to go see what those went up for, too. That's an interesting one. And 11,000 of the SEP 30s. And then Monday, 250,000 almost exactly going up on the tape. 25,000 of the November 75 calls and 25,000 of the November 95 calls. So on November, looks like call vertical, and the October par calls the day before. Mr. Meatball, these have to be your trades. These have Carmen line written all over it. Nove 75, 95, and October pars. That's you, right?
That was all me. I did that at the same time I was buying the Apple 700 calls for 52 cents in September.
Is that before or after you
Tesla 3500?
Before or after the Tesla 3500s?
That was all me.
The Tesla 3500s. The trade of a lifetime out there, listeners. All right, let's keep rolling. Shelly, we're talking about light volume out here. An interesting piece. We talked about it a little bit last week, but I want to get your thoughts on it, most namely because it names you in it. An interesting piece coming out of Crain's about how volume in the VIX complex a little bit anemic out there right now. I think you made some thoughts about the liquidity. We just kind of talked about it. The volume across the board in the vol space is pretty light. Any thoughts on your guest starring appearance here in Crain, sir, and the light volume we're seeing across the board in the volatility space?
The news stories are always looking for, a story. She certainly was looking for a story on SIBO. She also wanted to know if any of that volume had moved from VIX to spikes. I wish I could have told her it had, but spikes volume is non-existent at this point and won't be till we get the future back. That being said, the loss of some of the ETFs that use the spikes futures and spikes options, that's going to reduce volume naturally. Vol at higher levels going to naturally reduce volume. There's a lot of converging factors, but as we're seeing, as spikes in VIX prices drift lower, I think there'll be a lot more activity coming back in. I don't think there's really a fundamental change in the market other than the loss of some of those ETFs.
Yeah, I like Lynn. I've done a lot with her over the years, but she definitely comes into a story with a certain viewpoint that she wants to convey during the article. And it was clear that she was looking to comment about the dearth of volume over there on SIBO land as a result. Interesting piece, so I recommend you check it out there, listeners. Now let's move on out to all things VXX, a.k.a. the product you guys usually like to fade. It seemed like that fade trade working out pretty good for you this week. Coming into Showtime, VXX was at about a 26.30. That puts it down about almost 3.5 handles. It's actually gained a little bit of that back during the show, gained about a third of a point back, so down a little bit over 3 points. It's at about a 26.60 right now. Coming into Showtime, it was at about 100,000 contracts, which is decent paper for VXX. Not quite half of its ADV, which is actually getting robust up there again. It's over 200K again, up about 11,000 from last week. And now as the show has worn on, they've actually put up some paper, about 150,000 total contracts up there in VXX today. Let's see what some of the hot contracts are out there today. Before we get to that, let's get to the top positions out there in VXX land, which means, Mark, it is time for our game. I don't have the music yet, but let's play if you are ready. Let's play your Where's Caldo. So let's guess. I've already looked I'll have to get it set up somewhere so we have a producer do this. So I can't see it either because I've already seen it, so I've been spoiled. But what is your guess for where the first call falls in our top 10? What position does it fall, sir?
All right, so where does the first call fall in the top 10 VXX positions? I'm going to say, I didn't look at the show notes. I am going to say that it is number 8 this week. It is number 8 this week.
Shelly, if you want to hazard a guess, this is one of our new games. Just guess a number between 1 and 10 if you don't know what the hell we're talking about. And we'll see who comes closer, sir.
I don't know what the hell you're talking about, but I'll take Lucky 7.
All right, Lucky 7 is a good one indeed. Mr. Meatball, I'm starting to wonder if you are indeed reading the notes because you guessed it right on 2 weeks in a row now. Number 8.
Oh, my gosh.
Number 8 is where our first call appears. If you're not familiar with this weird game that we just made up on the fly, listeners, we're trying to guess where the first call falls in our top 10 ranking out here for VXX. And it is indeed number 8. You know, we always talk about the put action out there, but the calls trade too. And it's sometimes an indicator how active the calls are, what exactly is going on out there this week. So that's number 8. That gets you the AUG 30s. Quick breakdown of the top 10 out here. Number 10, 20K of the Jan 22 puts. Number 9, also 20K of the August 25 puts. Then number 8, our first call, our first of 3 calls in the top 10. It's the AUG 30 calls, 20,600 of those bad boys. Number 7, we got 20,800 of the SEP 28 puts. Number 6, a whopping 21K of the AUG 23 puts. Number 5, back to our calls, the second call on the list, 25,000 of the AUG 35 calls. Number 4, 39,000 of the SEP 23 puts. Number 3, our third and final call on the list here, 48,000 of the AUG 30 calls. And number 2 and 1, you know what those are. The AUG 30, 22 put spread. AUG 22 puts, number 2 at 89,000. And AUG 30 puts, number 1, 90,000. These are a little bit light. It looks like he might have taken some of these off out here because there were over 100,000 each last week. So if he didn't, someone else did and came in, but not a material amount, about 10 grand total for each of those. So that size put spread still open out there, listeners, and looking pretty good this week after this VXX just refused to break through 30 for some time. And now it's looking a little bit better out there. Those 30 puts at least. Nice and juicy out there. Total of about 1.75 million contracts open. About, looks like roughly about 750,000 on the calls and about 1 million on the puts. So still puts leading the dance, but not by as much as you might think. Mr. Meatball, I know your crazies love themselves some VXX. What were they up to out there this week, sir?
Yeah, you know, we were watching that Contango VXX up until the last hour or so, got absolutely face punched. So, you know, it was a good week to be a put holder. And UVXY, even worse. It had an even worse week relative to VXX. So that has been what we were up to. We were trading short VXX versus some inexpensive calls to make sure we didn't blow out. But yeah, some good decay out there in the vol space this week.
Some pretty juicy decay indeed. Let's see if we can also find some juicy decay in your favorite earnings names. It's that time of year, listeners. Earnings season out there. Of course, you guys can crunch all the numbers for yourselves completely for free. TheOptionsInsider.com, courtesy of our friends over there at Oratz Land. Let's see. Let's kick it off the week. We had Clorox, Tyson, Marathon Petroleum, Take-Two. Tuesday, we had Disney. Interesting one. They reported overall pretty bad numbers and a pretty high price for Mulan, and yet the analysts bought it hook, line, and sinker, and they all raised their price target. $30 for Mulan. Done. Who cares about the parks and everything else? Wynn Resorts, Beyond Meat. Also on Tuesday, British Petroleum, Fox Corp. Wednesday, we had Moderna, CVS Health, Square, and Roku, and Etsy. Yesterday, Uber. Uber announcing they're doing better on the delivery than they are on the rideshare. Go figure. Who wouldn't have thought that right now? Dropbox, Papa John's. Maybe get myself a Shaq-a-Rooney or whatever it's called after this show. Yeti. At the tumblers. And then, Nintendo. Nintendo also blowing the doors off, and T-Mobile. We got some of the earnings move results, and earnings season reports for you available at the website. I'll break down a couple for you right now. Some of the hot names this week. Square coming into their announcement, which was the 5th after the bell. They were at 146.5. They were pricing in 4.6% and actually delivering 3.5%. So yet another kind of underwhelming move from an earnings perspective. Remember, this is kind of in the immediate aftermath of the earnings the next day. If you, of course, carry this out for a couple of sessions, the move might be larger. But in the immediate blush post-earnings, that's what we're looking at here. Roku, another name that's been very volatile in our top 10 most actives pretty much every time we do it on the odd block there, or the option block there. Let's see. Roku coming into their announcement also on the 5th after the bell. They were at 165.5. They were pricing in over 10%, about 10.1%. They delivered 7.1%. So yet another underwhelming earning. That's kind of been the cycle this season, which is surprising. Etsy, let's see. They were on the 5th after the bell as well. 135.5 is where they closed prior to their announcement. They were pricing in 10.2%. They moved 4.4%, just under delivering across the board. Pizza, PZZA. Let's see. They were at 99.14 going into their announcement. They were on the 6th. So yesterday before the bell. Let's see. They were pricing in 6.4%, actually delivered 1.6%. So yet another underwhelming name. Yeti, the aforementioned Yeti. They were at 51.63. They popped off yesterday before the bell. They were pricing in 8.1%. Get this, listeners, they delivered 1%. This is, Matt was alluding to this on the advisor's option earlier this week. This cycle, premium buyers have been slaughtered, and that certainly does appear to be the case out here. Let's look at a couple others really quickly. Uber, that was a big one. That was on the 6th after the bell. Let's see. They went into their earnings, $33.20. They were pricing in, let's see. Oh, this is the report. It's not the results report. I don't have the results report here. I have to go to the website for that, listeners. But they were pricing in $231. In the past, they have priced in $258. Let me just look really quickly to see if I have the results for them. No, I have to go to the website to get those, listeners. Those are not here. But interesting stuff here for Uber as well. You can also see the season report, which is just a sea of red right now. So you can see that people are underpricing Vol, and it's merited because premium buyers not exactly knocking the skin off the ball. Mr. Meatball, has this surprised the crazies in your pitch chat that Vol is so anemic this earnings season, sir?
Yeah, we've only had a few names really go crazy, right? We've had Apple, AMD, Facebook, but most of the names have been not moved what we expected. And, you know, that tends to happen when vol is higher because, you know, there's just so much juice already priced in that it's very difficult for these companies to move on a micro level when there's still so much macro floating around.
There's a lot of macro floating around, and we have mentioned it before. We didn't get a chance to finish all of them. We like to do our updates on what you guys are thinking in terms of your trends data for the year here for volatility. We used to hit on a lot of it in June. We'll finish off some of the other ones we found here as well. Sometimes search terms can be a little bit vague, a little bit nebulous. Something like VIX, like you search for spike, you can have a bunch of different things with spikes. VIX, at least, usually should be pretty focused on volatility. So we were pretty safe, we thought, in that one. We went back over the last year, and you can probably guess when that 100 on that Google Trends graph was listed, which is the pinning of the needle on it. That was back in the week of March 8th to 14th. We're actually well off that now. We're down to about, that was the 100 level. The graph right now is at about a 25. So VIX interest well off of those levels, even though it is trending up right now. If you're wondering where the interest is in VIX, it's in New York, followed by District of Columbia. So maybe the regulators paying attention, followed by New Jersey, California, Massachusetts. Those names, those locations make sense. We thought we were pretty safe searching for VIX. Only when we find out, when we search for what is related to VIX, what else do people search for when they search for VIX? We found out there's a Fortnite skin named VIX. And that was the number 2 related search. So apparently our VIX data is now completely unreliable because the CBOE volatility index was only number 4. The VIX Fortnite skin was number 2. And for some reason, XOM stock is the number 1 related search query for VIX. So I am completely confused that Fortnite skin throwing a wrench into the works. Let's instead go out to just straight up volatility trading, what people like out there, or just volatility. Just generic, the term volatility. Interest in that also peaked around that same time, March 15th to 21st. And it's roughly at about a half of where it was then right now. It's about a 43. So 100 would be the apex of the graph for the past year, listeners. It's at about a 43 right now. If you're wondering where the apex of interest for volatility is, that is in D.C. as well, District of Columbia, number 1. So again, maybe, Shelly, it's your regulators over there trying to work to approve the futures. They're searching for volatility on Google all the time. Hopefully they're doing more detailed things than that. But someone in D.C. is searching a lot of vol right now. Number 2 is New York. 3 is New Jersey. 4, Massachusetts. Number 5, Connecticut. No Chicago on there at all, which is kind of interesting. And if you're wondering what people are searching for in addition to volatility, it's 900 global volatility, which is something interesting, and also the Gold Volatility Index, GBZ, and a TVIX, which makes some sense because that one's going the way of the dodo. And let's narrow it down a little bit more to cap this off. Let's go beyond just volatility, because that could imply a lot of other things. Volatility trading, so very specific now. That peaked same week, around the same time frame, March 8th to 14th. But that one's still very active. That was at 100 the week of March 8th to 14th. It's at a 90 right now. So unlike VIX, which is at 25, probably a lot of that driven by that Fortnite skin, and even volatility itself, which is at about a 50, volatility trading, which is obviously much more specific what we're talking about here, at about a 90 still right now. So interesting stuff. If you're wondering where the apex for that is in terms of geographic location, that would be New York. So New York taking it there again, followed by New Jersey, then Illinois number 3. So that would, at least Illinois is ranked in there somewhere. I was surprised not to see it in the other words. Followed by California and Florida. There you go. That's your mid-year update on your volatility trends. You have a vol trend you want us to keep an eye on for your listeners, let us know. Meanwhile, time for you to let us know a whole bunch of things. It is time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it. Let's kick it off, as you like to do, with a little bit of love. These are crazy, tumultuous times, so let's start off in the optimistic before we go wherever we end up going because of your questions. Let's start off with 5-star review. This comes from Google this time. This comes from Jake Luttrell. He's very succinct. He just says, great content. Thank you. Well, you're welcome, Jake, and everyone else took the time to go out there and leave a review. Could be Google, could be Apple Podcasts, could be where our app is, could be YouTube, wherever you go to get this show. Keep those reviews coming. We love it. It helps in the algorithm. It helps new people continue to discover this program. It's been running for a long time, but we're always amazed when people continue to discover it all the time. So keep those reviews coming, just like Jake did. Thank you very much there. All right, next up, Mr. Meatball, this one's for you. This is our resident food guru. It seems like whenever we have a food-related debate or discussion on the show, this listener, J4340, chimes in. He's the one who gave us the extensive ordering list for how to order a Philly cheesesteak. That was him, I believe. Now he's chiming in yet again with another food-related issue. We were talking a couple of weeks ago, Mr. Meatball, about when you go to Austin, can we call you the Greasy Meatball anymore? Should we maybe change it to maybe, I don't know, I think I said barbecue, maybe we said chili. He suggested the Greasy Meatball should be the smoky brisket. A good smoked brisket is a Texas staple. What do you think about that, sir?
I mean, I do like a good brisket, I'll be honest. I don't have any issues with that. Yeah, I was going to go with some chili, maybe hot. Maybe you could call me the hot sauce because they love hot sauce in Texas where I'm from. And so, yeah, maybe Mark Hot Sauce Sebastian, I kind of like.
Texas, where you're from. Yes, I like it.
Share the smoked brisket with me, please.
Yeah.
I will.
Yeah, Shelly, this guy sent in the past a whole lexicon of how to properly order a Philly cheesesteak. It was I had no idea it was such an involved process. So I learned a lot from our audience.
Let me tell you a little something about Philly cheesesteak. I lived in Philly for 10 years. I'm only about 40 miles away now. I would take a Johnny's Italian beef over the best Philly cheesesteak any day of the week. And let me tell you, Chicago-style Italian beef compared to Philly cheesesteak, it's so much better. It's like how much better Spikes is than Vicks.
Oh, fighting words. I like it. Where's Lynn? Where's Lynn when you need her for the article here? I think you saying that on your last appearance.
By assassination. Wow.
I think you throwing that gauntlet down on your last appearance, the Italian beef versus Philly, is what prompted his email in the first time there, Shelley. So yeah, you're the one who kicked off this whole food-related kerfuffle here. Since you're talking food, Shelley, I'll give you a chance to chime in on something else here. This one comes from Alan M. He wants a peek behind the curtain over there at MIAX. So maybe we'll see how much you can oblige him. He wants to know, what is MIAX planning for spikes once the futures come back? Do we have minis? Maybe more expirations? He says, look at this. He says he traded a few spike contracts, but stopped when the futures halted. He's waiting for the big comeback and love the show. Well, we love you, Alan M., and everyone else out there who was slinging some spikes before all the madness unfolded out here. So, Shelly, I know you mentioned the forthcoming V spikes. Anything else? Any other hints? Any other teases you can give Alan M. over here, sir?
Absolutely. So when the futures get relisted, we're going to stick with the 6 monthly expirations till we see some volume pick up, and that'll drive adding additional contract months on both the futures and the options. With regards to minis, it's something we had on our plate. We were working on before we lost the big future. We're anxious to see how Cboe does with their mini. I believe it's launching next week. And we do plan on adding a mini once we get the regular contract back up and running. So that's
an interesting one. I'm really interested whether that is going to do anything. I always wondered the use case on those minis, just because I guess it makes some sense if you're running SMA programs. That would be where the use case would be. And the 1-to-1 you can get kind of the exact hedge, but I can tell you the market makers rather use a big future than a little future 100 million times over. So what outside of like SMA programs, what's the use case on the minis?
Well, I think there's a couple of use cases there. One, for the smaller market makers who might not be trading large size in the VIX and they want to hedge delta neutral, they can get closer to their hedge with the mini than they can with the big. It also opens the futures model up to the retail trader, the customer that doesn't have the cash in his account to trade the big. Kind of what you're seeing in equities, where you're seeing some of the retail firms sell fractional shares. It gives the customer access. So nobody's stepping forward to do fractional futures. This effectively is a fractional future, 1/10 the size. So I give the Cboe credit for this product. Look at the success of the micros over in the CME.
Yeah, that's what I was just going to say. You can't really – it's hard to argue with anything small, because I was similarly unimpressed when they announced the micros on my show, the CME folks. I thought that's moderately interesting, but is there really a marketplace for it? And spoiler alert, there's a huge freaking marketplace for it. So, the micros, I think, have changed the game for everybody now.
I think XSP has done pretty well on Cboe, or at least it was until, things kind of shut down. I'd be interested to see whether it would actually be a net revenue producer if you created a mega option contract. So one that was in line with the future and charged 80% of the cost of 10 option contracts or 85% of the cost of 10 option contracts. I'm interested in whether you would actually see a net increase in revenue on a trade like that, because your big players might be interested in that type of trade. I'd be very interested in whether something like that would be satisfying to some of the big upstairs ball funds.
They tried that with the Jumbo SPY very briefly, and it didn't. Let's just say it didn't get a lot of life behind it, and no exchange at least was a fan of that one, because they didn't want to hurt their core SPY business, which drives a lot of paper. But theoretically, I agree with you, Mark. It is interesting, but I think on the mini front and indeed the micro, I think it's hard to argue that there's clearly huge demand. These are obviously volatility products, so a little bit more niche than what the CME did, which are just base equity futures, but still, they're correlated. And if there's the huge demand for one, I got to imagine they'll be decent. So it sounds like, Shelly, when all things come back, sounds like a mini should definitely be on the table over there in MIAX land. We got time, I think, for one more here. This comes from Goshen Boy. I think you wrote this in a couple of weeks ago. When we were first commenting on just how wide that chasm was starting to become out there in the VIX futures. We were chatting about how expensive the forward price of vol was compared to the cash in both VIX and out there in spikes when the futures do come back. And Goshen Boy chimed in with what he said calls it a dumb question. There are no dumb questions, Goshen Boy. They're all useful and informative, because I guarantee you, if you're thinking it, someone else might be thinking it too. Goshen Boy writes in and says, dumb question. Does this correlate to the very expensive call prices I observed? Thanks. Well, I'm assuming you mean out there in VIX options land. The short answer to that is if the futures are high, then yeah, of course the calls are going to be rich. The longer answer is much more involved and much more nuanced, has to do with the overall vol out there, the skew, the call skew out there, how bid that is. All those things are going to contribute to the prices of those calls. But in a very short quick version of it. Yeah, if the futures are extremely high, which is what we're seeing out there right now, guess what? The call options on said VIX index are going to reflect that high level of futures. Mr. Meatball, you have anything you have to add for Goshen Boy, who says it's a dumb question? I don't think it's that dumb.
No, there's no such thing as dumb questions. Only dumb people who are afraid to ask questions. That's what I always say. So you're only asking a dumb question if you fail to ask the question. That's the dumb question. Being too afraid to ask. Yeah, there is when vol goes up, there is a high correlation between VIX and spikes implied volatility and the underlying price on the way up. People chase that upside because they're worried about VIX going to 200 and calls get bid. So you basically, as we're seeing the actual event, people chase the really, really, really far out of the money high strikes as kind of that safety net, that protection, because while the vol might be high, to them 30 cents a contract can be a relatively inexpensive hedge. And that's why they set it up the way they do.
If I could add to that, I think his question, he's asking about the expensive forward prices, so the VIX future and the implied spike future going forward relative to where cash is right now. And it's really a function of how big the tail is in the spiders and the SPX. One, you have a tremendous amount of options below the money because of the big sell-off down in March and then the rally back. And people are still concerned given we don't know what the outcome is going to be for COVID. When are we going to get a vaccine? When are we going to get a cure? What's going to happen in the election? What's going to happen with the unrest that's happening in cities across the country? These are all uncertainties, and uncertainties cause out-of-the-money options to be more expensive. There's a big tail in the SPX and the SPY right now on those puts to the downside, and that's what's driving the high forward price in the VIX futures and the implied futures going out through the election through the end of the year.
Well said. See, Goshen Boy, I told you there was a short answer and a long answer to that question. But Shelly, I actually lied. Since I got you on the show, we're going to do one more here. This one actually came into our crypto show, I believe, but it's more appropriate for this one because you're on it. This comes from Melvin Peters. He wants to know, what's up with Miami Exchange investing in mid-chains? Are they getting into crypto? I'm listening to the crypto rundown right now, which is, of course, our crypto program. Listeners, every Monday, I encourage you to check it out. But he goes on to say, but I will have to add volatility views to my rotation for the answer. Keep the fun coming. Well, we will keep the fun coming there. Melvin, Shelly, anything you want to add about you guys getting into the crypto space, sir?
Absolutely. It's a really smart group putting together a new market. They think a lot like we do in terms of technology and risk protections first. We like their thought process. We believe it's a good hedge for us going forward. We believe it's a great match partnering up with them. Similar to some of the other investments we've made, where we see like-minded thought process, pro-industry, pro-trading groups that we think we can help add value to the trading environment.
All right, well, there you go, Melvin. There's your answer. I'm sure we'll see more about that in the coming months as well. Now it's time for us to keep on rolling into our final, our most difficult, our most dangerous segment. It is time for the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the Crystal Ball.
All right, everybody. Welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the slippery pig that is volatility for the coming week. And it was a slippery one this past week. Looks like a little bit of an uptick here on vol to end the show. Let's see, where did we start here? We were at Spikes was at about a 23.25, and it's about a 23.5 right now. So a slight uptick, about a quarter of a point. VIX Cash was at about 22.40, and it's at a little bit north of 23 right now. So at about a 23 out there. So that puts it a little bit of vol coming back in as maybe the sell-off exacerbating a little bit out here. So last week, Brian led us all astray with his super high upside pick. I'm going to blame him because why not? He's not here to defend himself. He picked the 29%. He thought this was the week. This was the week where the worm was going to turn. Well, maybe if we wait a couple hours, if the sell-off exacerbates, that could be the case. Unfortunately, right now, at the end of the show here, that is not the case. So we're seeing, like I said, almost about 23 even in VIX and a 23.25 in Spikes. Mr. Meatball was at a 24.68. and I was at a 26.85. So Brian was, about 6 handles off. I was about 3 3/4 handles off, a little bit less in Spikes. Spikes is more forgiving. And Mr. Meatball was about 1.7 handles away, and by Spikes, about 1.5 handles away. So no winners out here this week. So guess what? Mr. Meatball was closest. So I will give you the choice, Mr. Meatball. Do you want to go first, or do you want me to go first?
Shelly's not allowed to go, right? He's restricted on this one.
Mickey Baller's never been my forte, but 2 as an exchange, I'd rather stay out of this. Thank you.
Yeah, it's a smart move. Smart move, Shelly. You know, that is much smarter than abandoning the Viking. I will say that.
You're never going to let me live that down, are you?
No. I will never let you live it down until you finally adopt my Scandinavian 5'10" Viking wife as your mascot.
You're just mad about all the ancillary royalties you're losing on this lack of Viking branding.
I'm really mad about the Viking wife. But the Viking wife Instagram handle would have been amazing. So I am going to say that it's going to be 24-24.
24-24. That sounds familiar to one of the ones I think you had recently out here. So interesting, 24-24. A little bit of actually upside for the Meatball, which is a rare occurrence for you out there. You know where I've been living for a while, listeners. I've been living slightly upside. That where I was about a few points north of where we were this time last week out here. In fact, actually, what were we last week towards the end of the show? Let's see. So we were down. We were at about, in Spikes, we were right close to a 26, about a 25 3/4. So where I was a little bit about a point and change north of that. And obviously that was a little bit too much, but I don't know. I'm still, for a while there, listeners, I hate to have my argument skew my prognostication, but it seems to have been filtering in there of late the last few months, skewing me to the upside. I'm going to skew the upside yet again. Once again, not quite as much as I have been. I'm going to stay, I was at 26.85 last time. I'm going to say 25 double this time. So 25.55 and then 24 1/4. I'm sure Brian, if he's out there listening right now, is shouting 29 at the rafters. But unfortunately, you're not on this week, Brian. So that's our market. 25 double for me on the upside, Mr. Meatball. 24 1/4 on the downside. If you have your own picks, let us know. Hit us up. Maybe you'll win some fabulous prizes. Unfortunately, that music means we've come to the end of this epic journey through the world of volatility. We talked Spikes. We talked the lack of the Viking, but the birth of V-Spikes. Stay tuned for that one out there as well. Maybe some hopeful signs on the horizon for the return of the futures. Saw some weird stuff afoot in the VIX futures when it comes to the election, just getting pricier and crazier. Of course, if you believe those quote-unquote war games, maybe not enough juice priced in to those futures out there. We talked all things VIX options. We talked a little bit of VXX, a whole bunch of your earning move results. Find it all for yourself. TheOptionsInsider.com. Even answered a bunch of your questions and a whole bunch more. Let's go back around the horn. Mr. Shelley, we'll start with you, sir. If folks are intrigued, maybe they have more questions about the crypto thing. Maybe they have questions about spikes in the futures or all sorts of other spikes-related topics. Where should they go? What should they do, sir?
You can see us at myxoptions.com. If you want to look into spikes specifically, myxoptions.com/spikes. Everything you want to know about spikes, who's afraid to ask, is available on our website.
I like that. That should be the title of a white paper or something. So you know where to go, listeners. myxoptions.com/spikes is the place to go to begin that journey. You get the quotes, you get the recent data, you get that snazzy little video there that explains what spikes is. In a couple of minutes, you get the press releases. If you want to know when the futures are back, they'll probably be listed there pretty quickly. And you get even linked to a cool show called Volatility Views. So it's a great place to go, myxoptions.com/spikes. Mr. Meatball, same question for you, sir. If folks are intrigued, they want to learn more about VXX or VIX or anything along these lines, where should they go? What should they do, sir?
Well, now I'm going to be launching my own Viking Index. It will be it'll be my tool for managing. What it will be is actually what is the volatility of the November contract in the spikes?
There you go.
So we'll
TM/completely unrelated to spikes.
Yeah. Well, no, I mean, V is the symbol for November, is it not? So there you have it. So we'll be doing that. And then go to options.com, sign up for my newsletters, and you'll be a happy camper. I put lots of amazing stuff out there.
I like it.
Yesterday, we put out something really interesting speaking of crypto, on Ethereum that you can find on our blog.
I did see that. Your friends over there at Genesis Volatility, who were on my crypto program this week, by the way. So those folks,
they're great guys.
Putting out interesting stuff. Check them out if you want some analytics over there in the crypto space. Not a lot of players out there doing that, so check them out if you're so inclined. Check out the Meatball over there at optionpit.com. And then once a year around November, check out his own proprietary Viking Index, completely unrelated to all things spikes. And on behalf of Shelly and our friends over there at MyAx and the Greasiest and Meatballs, soon to be the Smoked Brisket, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great food commentaries and questions and everything else. Keep it coming. And we'll see you back here next time for more Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest options platforms in the world. MyAx is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.myaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.